Welcome back. Tax reform taking center stage on Capitol Hill this week. Republicans are aiming for a full Senate vote on their plan as early as this Thursday to try and deliver on the promise of a tax code overhaul before Christmas. President Trump tweeted about the push last night. Here's what he said. Back in D.C., big week for tax cuts and many other things of great importance to our country. Senate Republicans will hopefully come through for all of us. The tax bill is getting better and better, and the end result will be great for all. The president is expected to meet with the Senate Finance Committee today for lunch, with all Senate Republicans tomorrow ahead of the crucial vote. I spoke with House Ways and Means Committee Chairman Kevin Brady Sunday about where they are today.
I predict we will have a new tax code for the new year and for a new era of American prosperity. We deserve it. Americans deserve a new tax code. And I'll tell you, whether you're in New York or California, Illinois, we're continuing to see our jobs in our plants and our research march overseas. It's time to end that. And I think any senator, any member of Congress who defends the status quo, look, I think Americans are hungry for a new code.
Joining us this morning is the U.S. Bank Private Wealth Management Senior Portfolio Manager, Eric Wiegand. Eric, good to see you.
Thank you very much.
Thanks for joining us. So what are you watching in terms of putting the portfolio together, ending the year the way you want it? What's most important in terms of investing right now?
You know, right now it really comes down to the economic data. So we'll be certainly watching what the consumer is doing from here to year end. We'll also be watching what's transpiring in Washington. We get an early indication Tuesday. We have Powell going to begin his confirmation process, and then certainly looking at tax reform. Not only tax reform, but we also have the budget coming up on the 8th of December, and then you have Fed meetings mid-December. So there's a lot to take place between now and year end.
Oh, sure is.
Eric, so when you look at the market right now, you have valuations that prices that we've never seen. Valuations are stretched possibly, but also if you get the growth behind that, you could argue that there's more room up to the upside for the market. Where do you guys stand with that? Because a lot of people, I think, this year have been waiting for that pullback, and they're going to buy on the pullback, but the pullback hasn't come.
You know, it really hasn't materialized. The pullbacks have been muted. The good news, as far as those valuations being stretched, to your point, is that the market has generally been driven by earnings growth. It hasn't been driven by multiple expansion. So we would certainly agree that as long as growth is demonstrated, that the likely bias to the market will remain higher. Technically, looking at the major indices continues to be supportive. So we're encouraged. We're not hugely enthusiastic, but as long as we are seeing earnings coming through, we'll maintain that positive bias.
So we were just having this conversation about tax reform, and if it doesn't come through, we've had guests that say there's going to be a big sell-off. What do you say to that?
You know, it's interesting. So many people are speculating whether it's priced into the shares, whether it's not priced into the shares. From our perspective, the reality that investors have chosen to embrace is what is defined by economic growth and earnings growth. From a tax standpoint and all the prospect of seeing infrastructure spending, we've actually seen very little, make its way to the bottom line. It would certainly have an adverse impact on confidence. Both business and consumer confidence are elevated, but talking to many management teams from public companies, they're just looking for clarity.
So in other words, the market sells off if we don't get taxes done.
In all likelihood, it would come in. But again, looking at, we're from a technical standpoint, you're 6% away from your 200-day moving average. So, it likely wouldn't necessarily be something that breaches that, and we could still remain in an upward channel.
Real quick, industry-wise, what would you stay away from because of elevated valuations?
From a valuation standpoint, relative to long-term trends, there are really only two sectors that are below their long-term averages. That would be telecom and healthcare. We're not necessarily drawn to those from a valuation perspective, but we continue to like the CapEx theme. So we still like areas like technology in the industrial space. We do think instead of being more industry specific, it's much more about the specifics of companies, and will likely continue to be a stock picker's market.
I can understand the CapEx part of it, because finally you're seeing businesses loosen the purse strings and start investing. And if we do get this tax plan, that's what you're going to see, more investment by business, because that's largely the tax plan. Corporate cuts.
Randall Stevenson promised it earlier this year, the CEO of AT&T.
That's right.
He said that if the corporate tax rate fell to 20 to 25%, they would definitely speed up spending. I wonder if he'd go on the record for President Trump now, given that the Justice Department is fighting that merger.
You're absolutely right. He was the first person to come out and say, this is what we're going to do.
Yep.
We haven't seen that materialize, because he's obviously trying to buy Time Warner.
Yeah.
All right,
exactly.
we'll keep watching that. Eric, good to see you. Thanks so much.
Thank you so much.
Thanks for weighing in.